Let's touch base with Naveen Kulkarni, Head of Research at Reliance Securities, joins in with his perspective on the markets. Naveen, it's great to have you on the show. Thanks very much for taking out the time. What's your call really on the markets currently? How are you viewing trade for 2019?
Yeah, so what we believe is the markets are at a very, very interesting juncture. So this month has been very, very interesting, where volatility for Indian markets has come down significantly, whereas the global volatility has risen. So from that perspective, the markets are at an interesting point. Reason being, what I think the Indian market believes is that the macros are quite favorable. Crude prices have come down significantly, and the currency has stabilized. So apart from that, inflation tends to remain in a very, very comfortable zone. So the markets are actually factoring in the macros, which are quite positive. Whereas what we believe is that the political scenario is still evolving, so that will continue to pose challenges over the next 6 months. So overall, from 2019 perspective, we believe the first half could be a little more volatile, but second half is likely to be more encouraging. So that is our base case understanding of how 2019 is going to pan out.
Okay, and so what are the themes that you're playing with into 2019 in terms of the sectors that you like and the ones that you don't?
See, our themes for 2019 are again focused very much on earnings growth, right? So, see, earnings visibility is going to remain the key, because in times where volatility is high or volatility could move up and down, see, the market will always find it difficult to re-rate. So that is where the market stands in during such times. So earnings visibility is what is going to deliver stock returns. So from sector perspective, we like banks, where more or less I think the consensus believes that earnings for 2019 or FY20 are likely to be met. The second sector we also like continues to be IT, where again the fundamental factors are fairly strong. Apart from that, earnings visibility is going to be strong in 2019. So these are the two sectors which stand out for us. Consumer is another sector where earnings growth is likely to be strong for FY20, but there could be challenges with regards to valuations which are concerning for the sector. So that is how we are looking at the three key sectors for FY20 and calendar year 2019.
Right. Also wanted to get your sense on what is it that you're making of this entire PSU bank recapitalization. It's come for a small list, the ones which needed the capital more. But do you think this would make for an investment case in any of them?
Yeah, so see, of course, capitalization is a positive. There are two ways to look at it. One is the kind of dilution which happens because of the capitalization, so that will pose a challenge in terms of future ROE for these banks. But having said that, if I were to look at the case where case of, let's say, the Bank of Baroda and the merging entities, so they will get some bit of capital, right? So that is going to be a positive for the merged entity, which is likely to be stronger. The whole process could be tedious. That is something which remains to be seen. But let us say what happens during this time frame is that the capital which is infused and cleanup happens, right? So and the overall merged entity emerges to be much stronger. So probably there could be some investment case in a bank like Bank of Baroda. Apart from that, SBI is definitely a leading PSU bank where there are the challenges are not so significant. So from the PSU banking space, the two stocks that are that we continue to like are SBI, and with the recent development, Bank of Baroda also looks interesting.
Okay, from the IT pharma pack, what are your top bets?
See, from the IT pack, Infosys continues to remain our top pick. Valuations are reasonable. The operating performance has been quite healthy. We are a year past the last buyback that has happened, right? So there could be more which can happen in the next 3 months or so. That will again, I would say that suck out liquidity from the market. So there are a lot of things which which can work for Infosys. So that is our top pick in the large cap space. In the mid cap space, we continue to like Sonata Software. So that is another mid cap stock which is doing well operationally. It has acquired a few entities in the recent past which are structurally positive for the company. So more or less it's better cash deployment, better capital allocation, which is a theme which can play out for Sonata Software. So these are our two picks in the IT pack at this juncture.
Okay. Among industrials and investment-led themes, where is it that you're betting on? If we work with the premise or the assumption that the government will be stepping up on capital spending in the coming year.
Yeah, so industrials is again a very diversified basket. So among the mid caps, we like KEC, we even like Engineers India because of the kind of correction that the stock has seen, and there is some bit of comfort even on valuation front. Apart from that, we initiated coverage on L&T recently. So that is I would say that a very broad-based play on the overall investment theme, right? So the first half orders were strong, the second half could be sluggish, which is pretty much expected. But the next year could be better. There could be pickup in execution. There is some capital allocation policy which is also working. The return ratios can improve. So LLT is also something that we like. It is also there in our model portfolio with the most significant overweight in the capital goods sector.
Okay, Naveen, good to have you on the show. Thanks so much for taking the time out and joining in.